It's literally that easy. And if someone had taught me options this way, I think I would have done a lot better. Because there is no way that any other method can show you everything that's going to happen. I guarantee you, if you understand this last 5 minutes, that you understand more than every fuckhead I've ever seen on the internet who pretends to understand options. Okay, options basics, okay? I call this segment, Fuck the Greeks, okay? Everyone tells you if you want to learn options, you need to learn the Greeks. Really simple plays. We're going to evaluate each one. So we're going to do calls, puts, spreads, okay? So we're going to do these. Look, you don't even need to know what they are. You just need to know that it's a play because the picture is going to tell you what's happening. So let's say Rivian, right? You don't know what you're doing. All you need to know is the days until last trading day is the expiration. What that means is this contract or derivative or this option, right? Which base its price on the underlying, which is Rivian, trades up until 122 days from the current date. That's it, right? Second step is, let's say I want to make a long-term bet because it's 122 days. So I don't know what I'm doing. Maybe I'll go to calls and hit this. Well, all I have to do is load it in here. You either press the buy or sell side, whichever, because you don't know anything. Right now, you're just discovering what does this thing do? Well, I see I've loaded a single buy one of call. All right. Okay. Well, what is that? Well, you're going to know exactly what it does during the whole trade if you right click, analyze trade, and you hit risk profile, because that's all finance is time and risk. So we're going to make this chart a little nicer. If you remember math, you remember an X and Y axis to describe whatever's happening, right? So on your X axis is the price of Rivian. So what we're going to do is take a screenshot because I can't write on it. And I call this Fuck the Greeks because I don't need to know about any of that stuff. I just need to see the picture because the picture is worth 1,000 words, 100 words, whatever the fuck you want it to be. Okay, so the X axis here is the price of Rivian, and it's going to tell you your profit and loss on your Y axis, and you're going to see it decline into your zero line to go into your loss. So this is your loss area and this is your profit area. So as the price of Rivian changes, so does the line that describes what's going to happen. There's two lines here. The purple line is today, and you look down on the key. The blue line is at expiration, right? Because remember, we saw that this is 122 days that this option lasts, right? So what you'll notice is as the price of Rivian goes up, we make more money, right? Because if you were to look at it here, it would be $4,000. Okay, we're going to circle that in green. If the price of Rivian goes down to $110 or $100 roughly, we'll put it in red. We lose 4K or about 3.5, right? If it goes down to $100. But if you wait till 122 days, which is at expiration, you make less money. Why? Because it hits the y-axis at about $1,000 here, 1.5K. See that? And it tells you what your profit and loss is exactly. There is no fucking reason to start out with the Greeks and confuse the shit out of you when you don't understand anything about an option. Why did you choose March expiration date? I just picked anything. The point is to go in here like a bull in a china shop and learn it, right? You're going to learn in, let's say you take the next 3 hours to do this, you're going to learn way more about options than any person who spends 5 hours listening to YouTube videos. Because why? Because the picture can answer the 20 million questions that you guys have is, well, what if Rivian goes to 190? What if Rivian goes to 220? Well, what if Rivian goes to 240? Well, this will tell you. It will answer a whole lot of questions, and I'll show you how to use it with a simple buying a call. What is a call? A bet that Rivian is going to go up, but it's a much more complicated answer, and that's why the picture is your answer. I'm not going to sit here and lecture to you guys about what options are because you're just not going to get it until you fucking see this picture. Soldier asks, why did I pick that expiration? Well, because I don't like decay, right? So options they're basically charging you for your time, right? They're saying, okay, well, you don't want to spend the stock, so I'm going to take the risk and I'm going to sell you this option, which you've purchased, and they're going to charge you for it. It's just like rent, right? You're living rent-free in that market maker's mind, and they're going to fucking charge you for it. Sometimes you win, sometimes they win, okay? So what happens as time goes on? Well, what's really cool about this tool is you can find out what happens to this option as time, as volatility changes, as expiration changes, as the date changes. So if we want to see what happens as time goes on, we can hit the day step. And I hit four lines to represent the multiple days that can happen. And what we're going to do is we're going to zoom in here a little bit so you can see it. Okay, so as we're going to change the step to maybe, since it's 122 days, we're going to say we're going to measure every 30 days. Right here in the step, it'll set up the lines to tell you what happens to this option every 30 days. Okay, so again, the purple line is today. You can see in the key here, it says on December 16th is the blue line. So we're going to put 12/16/21. So in 30 days, if Rivian's price stays the same, you will lose money. See that decay? You will lose $1,000. If the price of Rivian another 30 days, which is January 15th, stays the same, you lose, where does it? Like $1,200, right? If you hold it another 30 days without Rivian moving at all, what happens? Minus $2,500 roughly. See that? If you hold it another 30 days, well, you lose almost the full value. So you can watch time decay every 30 days on this option. So now what do you understand? That time is a factor working against you when you are buying a call. It's literally that easy. And if someone had taught me options this way, I think I would have done a lot better. Because there is no way that any other method can show you everything that's going to happen. And what's cool is when you move the mouse over this, the entire key changes. So you don't have to like look on the graph, right? So as you move the price of Rivian, let's say if Rivian actually moves up, you make, if it moves up in 30 days, you make $2,400, right? See all that? So let's say we want to see all those options in terms of days, but let's see what happens to an option as more or less people buy it. Contrary to popular belief, there is a limited supply of options, meaning somebody else has to take the other side. Yeah, conspiracy theories aside, sometimes there aren't as many as you think. And if there's more people demanding options, the price goes up. And what is that? That's called volatility. Volatility a lot of people like to talk about it as a fancy name, but volatility is just the cheapness or how expensive an option is. It is driven by the supply and demand of the individual option. So what we can do here is look at volatility, and typically what I would suggest is to look at increases of about 15% and see how they move, right? You can see that volatility affects this long call very differently. If volatility goes up, because I put up in a positive number, if I put the number up, then you see that the price of the option goes up. And now you're understanding that when you do options, you turn a 2D problem into a 4D problem, right? Whereas you were just betting on the price of Rivian, now you are betting on will people demand the underlying derivatives of it, which can become complicated. That's why if you're starting out trading, I suggest you do stock before you layer on options and complicate your life, okay? So now you're betting on multiple things: time, volatility, and the stock price, right? 1, 2, 3. So now you understand what a call is, right? It's just a bet that the price, the stock price, is going to go up. A long call, or whether you buy it, it's short if you sell it, right? You'll see the +1. Short is the -1, but you'll see a long call, which is what we've loaded in. Bets the stock price goes up. Bets that time goes down, that you sell it quickly. And it bets on volatility going up. I guarantee you, if you understand this last 5 minutes, that you understand more than every fuckhead I've ever seen on the internet who understands, who pretends to understand options. Okay, so now you know a call. Let's do a long put. Next, a put is just a bet that the Rivian stock price in this example is going to go down, right? It has 3 components, and we're going to go through each one of those. Remember, it's time, volatility, and stock price. So on time, we'll show you how it's short time. It is a bet that volatility is going to go up and that the stock price is going to go down, right? But who can keep all that shit in their brain? I can't. So we're going to put in Rivian. We're going to go back to the options screen. We're going to go to puts, and you pick whichever one you want. Now, I've hit one, and you'll see the tooltip. The tooltip is really hard to see. It says sell, okay? Remember I told you we are buying a put. So we want to do buy. You'll see it turns green, and it says +1. That's how you know you're long it. So we're going to right-click Analyze Trade. And you'll see it loaded the previous one in there. So you've got to uncheck that one or close it. Notice how the lines, and we're going to go back to, we were at date. We're going to go back to this, and now it's the same thing except inverted, right? Because we bought a put, which is a bet that it's going to go down. As you see the price, we're going to copy it again, and we're going to show you that as the price of Rivian goes down, we make more money. If it even goes all the way down to $50, we'll make $5,000. If the price goes up, however, we will lose $5,000 by 3/19/22, right? If we hold it till expiration, any point along this, we're going to lose whatever that is, 3K, whatever the price of the option is. Now, remember, these are basics. You're going to need to learn a little bit more to get really trading on them. But this is how you understand fundamentally what they are. And then you can worry about the mechanics of it. A lot of times people just teach people mechanics, and that's not what I'm about. Because you need to know what the fuck you're doing. And the only way you know what the fuck you're doing is learn essentially what it is. Again, the purple line is today, blue line is at expiration. So remember, options are 3 things: time, volatility, and the stock price. So they include rho. Yes, they include the interest rate for anyone who wants to argue with me. But interest rates don't change that much, and most of you aren't trading the Fed, so forget it. So now we're going to again do time, which is the day step, and we have it set to 30. You'll notice that here, if we let this go all the way to $50, right? Even if all that time persists, we'll still make 5K. It is going to be really unlikely that Rivian goes from $160 all the way down to 50, but who knows, right? But in the intermediate time, as Rivian steps down in price, you can see that as time goes on, you tend to lose money. If you center on the 117 price, you see if Rivian moved all the way down to 117, you consistently start to decay in money as time goes on. You can see here in the key, if you hold it 30 days, your profit went from $1,600 to $1,200, $1,200 to $660, $660 to minus $30, down all the way to losing $1,000. Do you see that? The volatility description is a light bulb moment for you. Exactly. That's the light bulb moment that you need to have every time I teach you something, because you've probably never been taught it that way before. And a lot of people become unprofitable because they don't understand essentially what they're trading, right? I focus on basics. You can learn all that other complicated shit from other people. I can teach it, but it's never going to matter unless you understand the essentials. This chart assumes volatility stays the same because you have a multivariate problem, meaning there's multiple variables running all over the place. Remember I said you're turning a 2D problem into an 8D problem. So you have to fix some variables so I can show it to you in a 2D environment. So that's why you have the drop down where you continue to cycle through the different variables and we're changing them. So again, this is the time chart. Next, we're going to do the volatility chart. This is increasing volatility. Rivian IPO is very hypey. Maybe it keeps going. Maybe the volatility or the demand for the options go down. Remember, Rivian's options just opened today. Assuming that the volatility is going to go up doesn't seem like a terrible common sense bet. However, it could always be wrong. That's how stock things are. Okay, so let's zoom in a little bit so I can get a better chart. You can see how much volatility is affecting the put side, especially. Notice the steepness of it, right? As you go on in your career in options, you'll just be able to tell by the picture the pricing differences. So this is again fixing the fixing time and instead showing you the volatility. Okay, you'll notice the volatility as it steps up, the price of your option goes up, right? Volatility being at today's price, which is always the purple at 148, is this line. As volatility steps up to 163%, the price of it goes up, right? And that's pretty normal, right? If more people demand something, the price will usually go up as long as the supply stays the same. It is sometimes also the volatility can go up if the market maker or the person selling it doesn't want to take that much risk, right? It can also be a price thing as well. Most of the time it's demand, because then it'll go all the which way around. Who are the market makers? Well, right now Citadel comprises 70% of the market. Anybody who has the money and has the wherewithal to try and gain the spread difference between the bid and the ask. So we showed you time, price, and volatility on a long call and a long put. Again, a long call is just a bet mostly that the price is going to go up. If any of you remember telephones, right? A call is the price goes up. A put is that the price goes down because you put down the receiver. That's how I used to remember it. Again, if it's based on time, you're shorting time because time works against you. And volatility, it's a bet the volatility will go up. I'll just write vol. Just that easy. And you can use this to think about any type of spread without someone teaching you what it is. It's specific to the actual stock. So let's say I wanted to learn about buying a spread, right? Here we have a vertical, which is an offsetting transaction. It's a simple way to bet on Rivian going down in a very limited risk kind of way. So we're going to hit right click, analyze. We're going to remove the old one so it doesn't confuse us. This is about expiration. It's a very coin flippy bet. At most, you could see $250. At worst, you could lose $250. It's a coin flip, right? And so this way, you can even trade a put vertical. aka a bet that the stock is going to go down. But see how fast I saw that? Why? Because the picture tells you so much. This is thinkorswim TD Ameritrade. It's the best tool I've ever seen to describe what we're doing here. Right? Has anyone ever tried to teach you what a vertical is with words? I just can't do it. My brain doesn't think this way. Okay? That was my fastest fuck the Greeks, fuck everything you know about options. This is the way you need to start thinking about them talk.